Hi everybody, we are going to continue with the data that we had from previous question and now what we are trying to calculate is what is the operating profit if 5,000 units were sold. Remember from the previous problem, the sales price per unit was 3,000, total variable cost was 2,500 and total fixed cost was 800,000. Now I'm trying to calculate the operating profit if 5,000 units were sold. Profit is equal to revenue minus cost. My revenue is sales price times sales quantity. My variable cost is my variable unit cost times sales quantity. My fixed cost is the total fixed cost. So sales price is 3,000, quantity is 5,000. On the variable cost side for this, we have 2,500 times 5,000 minus the 800,000 fixed costs. My profit at 5,000 units is $1.7 million. Now, we are going to calculate something called margin of safety if 5,000 units were planned to be sold. And then we are going to explain what that exactly means. Margin of safety by itself is the revenue at 5,000 units minus the break-even dollar value. Now my revenue is 3,000 times 5,000 at 5,000 units. My break-even dollar value is something I calculated in the previous example in question 23A. And I calculate the break-even dollar value to be 4.8 million. Margin of safety is simply the difference between the two, $10.2 million. Something more interesting and something that will make more sense is the margin of safety ratio. If 5,000 units were planned to be sold, my margin of safety ratio is nothing but the margin of safety dollar amount divided by the dollar amount if I really sell the 5,000 units. And what this tells me is the higher the number, the better it is. And the reason for that is I'm planning some sales and I have some break even. And basically what I'm doing is I'm calculating the difference. The more far away I'm from break even, the less likely it is that I'm going to incur a loss, and hence the margin of safety ratio, a higher percentage, is better for us. And last piece is to calculate margin of safety in units if 5,000 units were planned to be sold. Now 5,000 units is planned to be sold. What we calculated, the very first thing we calculated in question 23A was the units based on the fixed cost, based on the price, sales price, and based on the variable unit cost. And we calculated it to be 1,600 units as break even. Difference between these two is going to give me the margin of safety in units. Now I have margin of safety ratio, and margin of safety in terms of units. Again, the thing that is making much more sense is the ratio itself, because the absolute figures won't give you exactly what you want. And what we said here was the higher this number, the better it is. You are more far away from the break even and hence less likely to lose money if something bad happens to your sales.